All right. It's Friday. We made it through another one. So I'm starting big picture today so you can see everything that was on the table and where the trades of the day were. The the morning started with an MDP, and that stands for missed daily pivot. Now, this is a fully formed strategy, and I don't trade it. I'm not the one who designed it or developed it. And even though I don't trade it, it's a really valuable insight. It provides context on the trading day. So in the morning briefings, if we start the day with an MDP, I try to point it out every time I see it. I'm not going to spend the time in this video to explain what the MDP is. You can Google it, find it on YouTube. There's a ton of videos on it, and you can kind of get a little more info on it. But it's no longer an MDP because we came down and tagged that thing and we overshot it. We hit the ADR of the day. That was the ADR half. And then we came back up off of that and really struggled with the Globex low for the rest of the day. Now, this entire trading day, I consider to be really a trash day. It's okay. It's tradable. But if you're looking for high conviction opportunities, today just wasn't the day for that. Too many ancillary and external factors were going on. Today's OpX, that's options expiration. It's triple witching options expirations, no less. So we had a lot of extraneous volume going on that didn't actually lead to any price action. And what that comes from is for these large institutions and firms that are already holding positions and they want to keep them, they'll roll those positions. Well, I mean, that's great, but it didn't add to anything, right? So the volume is misleading on a day like this. Plus, we tend to pin at different levels on a day like this. The ES and the SPX especially will pin on days like this. So yesterday, for an example, that hard run that we had all the way up to 4,000, that was a part of the dealer hedging, dealer gamma hedging, or let's see, what else is it called? Yeah, gamma squeeze, any of that, right? That's what the run was yesterday, that fueled drive all the way up. So today we really had the expectation that we were going to pin on one of those levels that you can get off of spot gamma or tier 1 alpha, and it was going to be 39, 39 and a quarter, maybe 39.50, 39.75. You kind of getting the hint, right? These are known levels because of the options that are built around those positions, and price gravitates into those zones. It almost becomes like a guaranteed, and I hate that word, but almost a guaranteed positioning. So then we start to pinball between those levels and we just can't get out of it. And we had this expectation at the beginning of the day because we really didn't have a lot of econ. We're all waiting on FOMC next week. We have this bank crisis still unfolding, a potential meltdown from the European banking system. We've got Bank of Japan next week ready to throw fire into the system. We got a lot going on and just a whole lot of hold your breath, hurry up and wait kind of scenario. So there wasn't a big expectation of an expansion day today. And we already had a big expansion day yesterday. So the main takeaway in the morning briefing was that we were very likely going to hold the range. And my comment was that I wasn't really looking for an opportunity to trade unless we escaped the Globex range. Well, as you can see, by the time we actually did escape the Globex range, all we managed to do was get to that weekly pivot point, and that was it. And we just pinballed there for the rest of the day between the daily pivot and the weekly pivot. We got nothing. Now, that doesn't mean that there wasn't trade opportunities. We just got nothing on the way of, did we expand? We managed to get the ADR half. That wasn't really hard to do. We did that in the Globex. Then we punched through that with conviction, broke the Globex low, came down and tagged that weekly pivot, and then came right back in again. Notice the time frames too on all of this, right? The time frame for the breakdown at 10 a.m., which was absolutely beautiful. That was a textbook double top. And double tops and double bottoms are kind of the narrative for today worth talking about, because I continue to get questions on this. Double tops and double bottoms are traps. They're designed to play the sucker's bet, right? So they lure you in, they get you to believe that this is actually a breakout, and then they flip it on you and start dropping it. And you buy to enter, sell to close. Well, your selling adds to the selling. And this bar right here, that was the capitulation bar. That's where all the bulls finally puked everything up and said, I can't take it anymore. And they bail out of the system. They're out of the trade. When you get a double top or a double bottom and it fails to make the same cut low, and then it backs up and makes the run, be very careful, because that's very likely not a double bottom at that point. That's a continuation with a breakthrough. But that's not what we had here, right? Here, it was just a straight shot. Then there was the double top breakthrough and the failure. Now, don't get me wrong. You can't always spot these. There's times where it looks like it's going to be a double top fake out and it's going to come back down, and it just breaks out and keeps on going. So nothing's 100%. Nothing is, a guarantee. And even though a good classic top or classic bottom should go deeper than the previous low before flipping back and running the other way, we don't always see that. Instead, what we see sometimes is a front run where it'll miss the lows completely and run back up, or it just breaks those lows and keeps right on going. And it's a little bit of design in that they don't want you comfortable in the trade. They don't want you to feel like you know what's going to happen. And so you start second guessing yourself. Is it really going to turn and go down? Should I get in now or should I wait for it to turn? There's no good answer to any of those, by the way. What I generally do when it comes to technical analysis and my trading is I focus on candle close, because a pattern and a setup and a strategy doesn't count if the candle isn't closed. I'll put an asterisk on that and say if you're using technical analysis to trade. The pattern's not valid unless the candle is closed. If you're using other things to trade, you don't need that candle to close, right? If you're using order flow and maybe Bookmap or Jigsaw or one of those specialty programs, you don't need the candle to close because you're using an entirely different approach to the trade. So green line down here, we had this very beautiful 2-bar reversal, tweezer bottom, and sharp climb back out of it. But when we came back down, this was a very broad, very wide double bottom, right? We'll just back it up to that spot right there. Very wide and beautiful double bottom right there. And classic, perfect double bottom trickery. They break through with conviction, suck in all the bears, get everybody convinced that they're actually going to break down and go lower, and then they flip that script over and they run it back the other way. That's the plan, right? Except this time, it kept right on going. So it wasn't a classic double bottom, but it sure looked like one for a minute there, right? Everything that you would expect it to do, and it didn't do it. And that's why you always have to manage your money. You never go in with your entire portfolio, right? That's why. So later in the day, we had the same setup again. Double bottom, classic, nice, broad, wide, clean rollover, stalled, didn't make it through, and then the drop. And it was just enough of a drop to trick everybody in there. And I want you to focus on these two candles, those two blue candles, because that was the bears puking out their position. I know it's Not exactly the greatest imagery, but that's what it's called, puking out the position. It's really hard to tell the difference between this and the other one, right back here where it kept on going. Now there's different things that kind of give you a warning when it's a cluster and then it drops, or it doesn't cluster at all and it just drops right through. But they're not always great, right? They'll let you down, and nothing's 100%, right? So you just gotta play it with what you have and hope it all works out. Now there's things you can add to the system. Some people like their indicators, MACD, RSI, stochastics, and hey, I'm not against it. It's just not my thing. But you can also add order flow, bookmap, jigsaw, even just time and sales and looking at the dome, looking at the orders that are on the dome and seeing the flood of orders that are coming through, looking for sweepers and things like that. You can look at a wider bid-ask spread when we start to break through those levels and the spread really widens out. Some platforms offer like volume delta and things like that, cumulative volume delta, whatever works for you. At the end of the day, they say price rules, and I take that to heart. So I just look at price on a lot of different things. With this double bottom that didn't work, the one that broke through, there was a couple of things here to this. One, it was the 10:30 close, so EU was closing. That was part of it. And let's see, what else did we have? There was some movement in the tick and the AD that really got my attention. So when we pair that move up today, get my mouse to sync on these. Here is the low. And we had an earlier warning, and I pointed that out the other day, that a lot of times tick will happen first, and then price will follows through the breakdown. I'm actually on the wrong spot. Let's do this spot right here. Was pre-warned right there. Moments later, we went through it. Right, so a little bit of a heads up that it wasn't going to work. And that's not enough by itself, right? It's more of like a cumulative effect of the things that we're watching or the things that we're looking at, things we're looking for. The move in the bonds today and the move in the tick really had a lot to do with what was going on. Bonds, yields, the lack of move in the dollar, US dollar, Japan. So if we look at TLT, and I'm not going to put TLT on a tick chart because that really just doesn't line up well. The TLT has this triple top right at the time that we were getting this double bottom. And persistence beats resistance. So in this triple top with the TLT, it really looked like it was going to break through. And every time the TLT faded down, the S&P would rally up. And when the TLT would rally up, the S&P would fall down. So when the TLT got to resistance and the S&P was aiming for support, we wanted to see, was it really going to break through there or not? This breakthrough matches this breakthrough. Okay, so we had more than one thing that we were able to look at and more than one thing to be concerned about. These extra markets are my indicators rather than, the traditional RSI and things like that. It doesn't mean that I'm right or that somebody else is wrong. It's just what I like. Price is king or queen, if that suits you. So why not look at price? That's the way I approach things. So this double bottom that ended up not being a double bottom matches perfectly with this triple top that did not turn out to be a triple top, right? It turned out to be a breakout in the TLT and a breakdown in the ES. Beautiful trade. Now, my trade today actually came in the waterfall event. So I caught this move to the downside. And as I usually speak about when it comes to waterfalls or big moves like this, they're low conviction trades for me. I'll trade them, but I don't size up in them. I ended up taking it in the NASDAQ with a micro contract, just one, or excuse me, a mini. So this one contract in the micro, I said it right the first time, it makes $2 per point. Right? That's the way it goes. And I closed that trade for very nearly $100. All right, so not a bad move for that little bit of risk that I took. Made $100 using this tiny little product. It was over really fast. I think it was 5 minutes for that $100. It's not bad. It's like $20 a minute. So not bad. And it was the waterfall. I just caught it on the fade out with this failure here on that breakdown. Not bad. It certainly wasn't the best trade of the day. I think one that it really lined up a lot better was this one right here. The only issue that I had with it was time. So this is a rejection off of the Globex low. Now, by this time of day, I was busy on a lot of other things. I didn't trade this afternoon session. OpEx, everything else, I was doing work, so I just didn't get it. But I had someone ask, hey, did you trade this? Or maybe it was the breakdown here, because I posted that one too, a wedge breakdown. And, you know, fair, honest question. I was posting that it was about to break down. I gave the heads up. Hey, watch out. We got this wedge. It's about to break. And it broke, and there it went. And the question was, hey, did you trade that? No, I'm already day done. I didn't need to get any other trade. And what I like to focus on is conviction. Today's not a day that really screams conviction with everything that I'd already mentioned. So is it tradable? Yeah, sure, absolutely 100% tradable. But would I size up in conviction on a day like this? No, not really. And see, when you're new to trading, trade small, trade often, live to fight another day, keep your contract size small, your positioning small, don't aim for really large moves, and gain experience as you grow your account a little bit at a time. I'm a big fan of that logic, but at some point, you have to change the game. You got to start sizing up, getting those bigger trades, and getting done and backing away. What happens instinctively when you start trading bigger position is you'll look at trades and really kind of ask yourself, am I comfortable putting on that much risk for this particular trade? No conviction, no trade. And what it ends up doing is it helps you weed out a lot of the trades that you had been taking that were maybe worked, maybe didn't. You know, they were your wishy-washy trades that was keeping your account looking like waves in the ocean. A little bit up, a little bit down, a little bit up, a little bit down, and you just really couldn't seem to get anywhere. Well, it's from those lack of conviction, wishy-washy kind of trades. Once you really eliminate those, then the only trades that you're really left taking are those high conviction trades that you're willing to put a lot of money on. Now, it's hard to mimic that in paper, right? Because, I mean, what are you scared of in paper? But if you wanted to do that, if you wanted to try to recreate that angst, I guess is the word for it, when it comes to your paper account, use the entire account, every penny that you have. Sounds crazy, doesn't it? You'll blow that thing up if you're wrong. But that's kind of the point. If you want to get out of the wishy-washy, you know, take 2 contracts, get 5 points, give it back, do it again, and you're just stuck in this rut where you're really not going anywhere, take that entire paper account, put it on a trade. And when you have to go through the steps to reset that account because you just blew it up again, you're going to start asking yourself, was that trade really worth it? Because when your risk is $20, you're going to take some pretty silly risks, right? What do you care? It's $20. You can't even eat McDonald's nowadays for $20. But when the trade is $2,000, $7,000, or $12,000, is it still a good trade? Are you still willing to put the trade on, knowing that you're putting $12,000 of risk on it? I think what you'll find is a lot of your trades you wouldn't have taken. because it wasn't worth that. You weren't that convinced. Are you $12,000 convinced? Right? So no, I didn't trade this afternoon. I looked at today's anticipated trading as mostly a wash, just nothing I really wanted to mess with. And while I was prepared to take a trade should something good come along, I wasn't hovering ready to go to trade it because there's just not a high conviction day today. So what did we have at the end of it all? We had this double bottom failure. Great play. We had the double bottom trap. We had the wedge breakdown. Those were about the best. The double top up here and the failed double bottom there. We had this really elongated head and shoulders right there, which far exceeded the target. All of those really good trades. Which one did you trade today? I'd be interested in hearing that. Throw it down in the comments. Let me know.